Hey everybody, uh, checking in. Interesting day, a lot of stuff going on. There's a funny meme on Twitter about like a Bitcoiner roller coaster with the hands in the air going up and down. And today is one of those days. It feels just like that. So I hope everybody has their seatbelts on. As I always say, strap in, wear your seatbelts, and bear with me. I'm a little bit under the weather today, so I'm just going to work through this as best I can. So first of all, the Fed is the big topic today. We obviously have to dig into this and talk about what it all means. So I tried to put together a little summary to give you guys all a feel for what happened. Now, first of all, I did not expect them to be so dovish and push the interest rate hike out to March. I expected 25 basis points. I thought that was factored in, but they're keeping everything cool, which is good. So first of all, as the Fed says, their outlook is evolving, so it changes all the time. They are anxious about stock markets. They're anxious about C-19 and new strains. They're anxious about the global financial situation. Maybe some other geopolitical stuff too. And this will keep the markets guessing. Now, as I mentioned, far more dovish than I expected. And Jerome Powell will not rock the boat ahead of the midterms. It's hard to believe. The midterms are 286 days away. This is the US midterm elections. And this guy, Jerome Powell, is under strict orders to keep everything calm and cool so the Democrats can get reelected. So it's kind of funny. So from that perspective, he's not going to do anything haphazard or rock the boat. And the macro and the Fed story is still very, very favorable. So what does that mean for us as investors? Not investment advice, of course. So first of all, the game plan for 2022. I was extremely aggressive with taking profits and hedging equity positions last year, but I wasn't with crypto. And part of the problem was, in full disclosure, I had a short-term capital gains problem. When you buy something for $20 and it goes up a lot to 200, that's a huge tax hit, especially with the volatility of crypto. Just like with a name, it goes from 20 to 200 plus, and then it tanks back down to 100 or below. If you had sold, it's very rare you can get back in at that level. So again, with a high tax bracket, it's a problem. But I want to share with you my kind of thoughts and game plan for 2022. One, it'll be an aggressive year. There'll be a lot of sideways chop in the markets. I will be a lot more aggressive in selling crypto. Screw the short-term capital gains. Better to pay taxes and profits than hold dogs. And the quantitative tightening, QT, and hike fears will prevail. So we're going to be living with that cloud above us for a while, and that means the markets will be sideways and choppy. New variants are possible. Geopolitical tensions are definitely going to be there. And overall, though, the good news is the bull market is intact. I do believe we're going to go up 15% in 2022, and the black holes will attract all the money, those with the most hyper growth, hockey stick growth. And we'll talk about one of those later as well. So that's my game plan. A lot more ruthless. I did say at the end of 2022 that we're going to expect a choppy year. We're not going to get the 1,000% gains we got in 2021. Those days are over. So now plan for sideways. Be bearish when things are hitting tops and play the dips and play the swing. That is a big part of my plan. So in terms of some good news, we're going to talk about a little bit of Bitcoin. First, ARK, this is another Bitcoin ETF delay. The SEC pushes decision on ARK 21 shares Bitcoin ETF to April 3rd. So this is the second time they've pushed a regulatory approval out. And this is actually a good sign. So when the SEC extend their window of approval, it's not a flat outright rejection, which is a positive sign they're thinking about approving a spot ETF. I still believe we'll have one by June 2022, and that could ignite the markets in a big way. But speaking of ARK, let's jump in here for a sec. Kathy Wood said last year Bitcoin would reach 500,000 by 2026. And people looked at her sideways when she said that. And at the time, Bitcoin was trading about 30,000. But yesterday and today, she came out with her partner in crime. And they predict with a very detailed analysis model of how Bitcoin could exceed, not hit, exceed $1 million by 2030. And she says the crypto usage is in its very early days. So again, if you have a long time frame, stack when you can. Forget this roller coaster that we talk about. Just stack. But that was huge news. Again, it's not the first time she spoke about $1 million. She spoke about that last year too. A lot of people spoke about $1 million. I've built models that, assuming just an increase of 33% compound annual growth rate for Bitcoin over the next 8 years, we get to $1 million. And that can easily happen with quantitative easing. The money printing is going to happen. It's going to continue. They might taper a little bit. They might increase a couple of basis points now and again. But the overall trend is to keep on printing. They can't stop mathematically. So speaking of ARK, they also came out and said this: Ethereum's market cap could surpass 20 trillion by 2030. And I had to do a double take for that. So 20 trillion is a big number. And by 2030, or within the next decades, that goes out to 2031. So give or take a year. Let's not quibble over that. But the current market cap, just plugging in the numbers here, the current market cap of Ethereum is $289 billion. Price is $2,400. A $20 trillion market cap means Ethereum could go to 166,000 in the next 8 to 10 years, which is staggering. 166,000. A very, very big number. But I have a quiz for you all. Per ARK, if you look at their numbers, which is better, Bitcoin to $1 million or Ethereum to 160,000 by 2030 or beyond? What's in your wallet? What would you prefer? So, of course, I crunched some numbers. Real simple math, actually. So if we look at the ETH at 2,400 and the price by 2030, 166,000 and $80. It's funny how they came up with that. The multiple 69x from today. And I know a lot of new investors are coming into the space and they want to do 100x every 6 months. In the real world, that doesn't exist, but having a 69x return on an asset over, say, 8 years is staggering. So Bitcoin, going from 37K, the price today, and in fact, it just took a little spike because the good juju is 36.9. It's gone up like $100 since I started. Call it 37,000. That's a 27x. So the question is, what would you want in your wallet? Now, I'm a big believer always, capital preservation first, alpha second, which is your excess returns. Remember that. And Bitcoin is the safer asset. There's a lot more inherent risk with Ethereum, but if they nail everything, and apparently they scratched the name ETH 2.0 now to something else, but if they execute and nail it, this is very feasible, very possible. A little higher than my 2030 price predictions, but again, interesting to note. And these guys do a lot of quant work behind the scenes. So that's the Bitcoin and ETH price prediction news. So if you're not bullish, I don't know what'll make you bullish. Now let's switch gears and talk about something that can do that 10x in a couple of years. So this is a funny chart. Big thank you to Sanjay for sending it in. It's Tesla in a bear market. Price from January 2020 to today. You can see it went from $100. It dipped down below $100 in March 2020. And that was a perfect opportunity to buy some leaps and other things. So just to give you some perspective of what this company has done in a very short window of time. But it gets better. So one of the joys of this investing game in this modern disruptive world is very few on Wall Street know how to value stuff. So this is a Wall Street, what Wall Street think the price earnings ratio is of Tesla today. It's 266.52x, which is kind of crazy. And according to their quant and numbers, that's very, very overvalued. Yes, that's a crazy PE. Of course it is. But let's dig into that and find out exactly how far off they are. So let's dig into PE ratios and PEG ratios, two of my favorite equity ratios for analyzing stocks and analyzing disruptive stocks especially. Because without hyper growth, it's very difficult to look at PEs and compare them. Because your typical stodgy, old-fashioned company trades at a PE of 20, sometimes 10. When you have something trading at a PE of 100, it's like, that sounds very expensive. But not when the earnings are growing at 61% per year. So here we are. This is Tesla. So the price of the stock today is 900. After the earnings, it dipped a little bit because the market's concerned about supply chain problems, but I expect it to pop north of 950 tomorrow, maybe even hit 1,000 because the earnings were incredible. And I know Elon Musk tempered the results on the call, but it's still very, very powerful earnings. The earnings at $2.50 a quarter is $10 a share per year. You take 900 divided by 10, you get 90. That's your PE ratio. Now, to calculate the real PEG ratio, it's the PE divided by the earnings growth, which is 61, and you get your PEG ratio of 1.47. Now, remember, per Wall Street, they believe the PEG ratio is 8.8. It's less than 1.5. And to compare that to other companies, Google, Amazon, Microsoft all have a peg of 2. You want a peg as close to 1 as possible. A peg of 2 is still not bad, but being between 2 and 1 is incredibly attractive. So according to this and my models, just using this as a comparison, Tesla fair value is 1430. Just using peg ratios alone, nothing more. So let's look at Tesla history. What I did, I crunched all the numbers back to 2015. Every quarterly earning number from revenue, which is the blue, and the left is the revenue amount, and on the right, and that's in millions of dollars, and on the right is the profit amount, again, millions. You can see the blue is going up, up, up. There was a couple of flat years when they were rolling out new factories and stuff like that, but now they are just literally beginning to accelerate, launching things like Austin and Berlin and thinking about a new location for another gigafactory. And they're even expanding the gigafactory in Beijing right now. But if I put a little red arrow on top of my chart to show you their earnings growth, it is stunning. Basically, all it tells you is Tesla is a complete cash cow, and they're just getting ramped up with new products, robots, Cybertrucks, energy storage solutions, megapacks, you name it. It's just quite an unbelievable story. So again, I've been urging everybody since the start of this channel over a year, get a piece, and there could be some buying opportunities coming. We might see some volatility in the market, and the 850 zone is a nice kill zone. And we had 860, 870 the other day as well. So again, not financial advice, but when you again, like Bitcoin, you think out 5 years, 8 years, the future is incredible. So let's talk about banning Bitcoin news. This is a common topic, and I've just seen a lot of concern about this all around the world. A lot of audience members are in countries like Thailand and Indonesia and Nigeria, and they're concerned about this. So what exactly is going on because of all these questions? So I did a quick update of where we are. So first of all, the funniest story was if you saw the memes on Twitter yesterday with the IMF kind of on their knees begging El Salvador to kick Bitcoin out. It was kind of hilarious. But the IMF on Tuesday, let me pop this up, they called on El Salvador to change course and stop using Bitcoin as legal tender, citing large risks posed by the cryptocurrency. And the bank also urged authorities to narrow the scope of Bitcoin law by removing Bitcoin's legal tender status. So again, a lot of pressure is on, but this Bukele guy is just kind of funny. But who knows, a year from now, the IMF may be blowing up the phones of places like Guatemala, Panama, Tonga, Argentina, Venezuela, Nigeria, Lebanon, Paraguay, Costa Rica, to remove Bitcoin as legal tender, maybe even Turkey. Who knows? There's a lot of rumbling about that today as well. From Erdogan, he wants his top people to look into crypto and the metaverse, believe it or not. He wants to maybe become a Facebook. Who knows? But that was interesting. So let's talk about the EU. Another ban for some of my friends that are concerned, especially if they're involved in Bitcoin mining. The EU is having a bit of an energy crisis, and they're getting very worried about Bitcoin mining because many countries depend on it, and they're doing a lot of it, but they believe it's taking a toll on the grid. And with all the stuff that's happening in neighboring countries and Russia that depend on, having a problem. But Germany, Ireland, parts of Scandinavia have very big mining operations, and they don't want to see these go. But some silly people in wherever it is, Utrecht or wherever the European Parliament is, want to kill it if they can. So we'll watch this carefully, but I don't think they're going to get away with doing that. Now, next country, Russia. They're up and down. The last 5 days have been a roller coaster. That seems I should have called this roller coaster. Everything's up and down. So Russia's finance ministry opposes central bank call for a crypto ban, and the ministry believes Russia needs regulation and not a blanket ban. So we'll watch this carefully. They're all over the place, but I think net they'll do what's best for Putin. See what he wants. So Thailand, unfortunately, now we have Thailand, and Thailand limits use of digital assets for payments of products and services on concern they could endanger the country's financial and economic systems. Note, every single time the people that are trying to ban this stuff, they're worried about their own financial systems. Remember, Bitcoin can run in parallel with the existing financial system. It's just another option for people, just like in El Salvador. If they choose to use dollars, they can. If they choose to use Bitcoin, they can. So next one on the cards is Indonesia. Last week we talked a bit about a fatwa in some Muslim countries, but now Indonesian regulator bans financial firms from facilitating crypto sales. So that's the easiest one, to kill off the supply first. But remember, they find a way to work on the black market like other places. Now, I put together a quick map on Google, pinpointing where all of the action is for all these so-called bans. And there is always a parallel. There is a high correlation between autocracy and Bitcoin bans. You have places like Algeria, Bangladesh, China, Egypt, Iraq, Morocco, Nepal, Qatar, Tunisia, Bolivia, Russia, Turkey, Nigeria. And some of these areas are a little bit gray in terms of full ban or not. But again, interesting to look at that. Do you want to peg your life to these places that ban people from a chance of having a future and getting a piece of something that could go to $1 million per Cathy Wood? I think it's very unfair. Now, what happens if you ban? Here we are. Nigeria ban impact. Nigeria is the leading country per capita for Bitcoin and cryptocurrency adoption in the world. Ta-da! Banning doesn't work. People figure a way around it. And that's the beauty. You just need an internet connection, cell phone, you're good to go. So, finally, it's the best advertisement in the world. When you ban Bitcoin, you make it more popular. And the IMF on their knees begging is a classic example. It's quite clear to the rest of the world exactly which side you want to be on when you have these bureaucrats and autocrats and dictators trying to dictate where you can go and where you can have financial freedom. So with that, everybody, hope you like the content. Hit the like if you do, and I'll see you all tomorrow. Hopefully I'll be feeling a bit better. Bye. And thank you to the moderators and everybody as well.